Today, I wanted to switch it up and talk about one of the biggest stocks in the stock market, and that is Apple. We will go over its upcoming release of the Vision Pro headset, as well as recent upgrades from analysts. I also want to discuss TSMC's recent earnings report and the effect that it could have on Apple's stock price. And finally, we will take a look at EPS estimates, and I will give my opinion on what price I am willing to buy Apple at. So if you enjoy the video, drop a like down below, and if you want to see more videos like this one, make sure to subscribe. Apple has had an incredible last year, with the stock trading up almost 40%. However, over the last year, we have seen two tails of this stock. It has gone up in a massive way, 42% from the start of last year till July of last year. However, in the last 6 months, the stock has basically traded sideways, sitting anywhere from around $200 all the way down to around $165. And one way Apple is looking to increase their stock performance is by introducing their new Vision Pro headset. And Apple began taking pre-orders for their headset starting Thursday, January 18th. This is ahead of their official release date of February 2nd. And I find it a little bit odd that Apple is actually releasing their headset in February, because oftentimes when you think about these manufacturers, they look to release new products in the fall months going into the holiday season. That's to encourage people to buy these as gifts or even buy them for themselves going into December and November. However, one thing that Apple could be looking to do is they have a very large spike in the fourth quarter because of people buying iPhones in the holiday season. They could actually target a spring or winter release for these headsets in the future to try and help stabilize a lot of their revenue. And ultimately, that could help bring up some of these lower months in the spring and summer. However, one thing to keep in mind is with a headset like this, oftentimes people are using it indoors. So releasing it in the spring and in the summer is not always the best time, because a lot of people will be looking to use these items in the winter months. And Apple expects to sell around 400,000 of these new headsets, which would bring in around $1.4 billion in revenue. If we compare that to the iPhone sales, they brought in around $44 billion of revenue in just the fourth quarter from iPhones. So this is going to be a very small fraction of the business. And over time, Apple expects this market to grow in a major way, thus increasing their revenue. But also they expect to increase their revenue by offering different product lines. For instance, they are starting with 3 different models: a 256GB model, a 512GB model, and a 1TB model. And these range in prices anywhere from $3,500 all the way up to $3,900. But on top of that, they also offer options to allow you to pay month to month. That would be around $291 if you're buying the $3,500 model. And they also have add-ons already, like prescription lens inserts for about $149. I've also seen news around their case costs of around $250. So they have a lot of different potential sources of revenue for these new items. And right now, Apple's business model is very reliant on iPhone sales, and they're trying to get away from that with the introduction of these headsets. However, analysts right now are still paying very close attention to where iPhone sales are headed in the future when making price predictions around where the stock price is going. And this Bank of America analyst is expecting Apple's stock to soar nearly 25% in 2024. Bank of America securities analyst Wamsi Mohan weighed in with a newly upbeat view of Apple's stock, upgrading the stock from a neutral to a buy on long-term optimism around the iPhone business. He is anticipating a stronger multi-year iPhone upgrade cycle in 2024 and has moved his price prediction from $208 up to $225. My opinion is that the iPhone upgrade cycle is actually going to hit in 2025, because oftentimes from a lot of people that I talk to, they look to upgrade their phones anywhere from 3 to 5 years. So if we average that to 4 years, and we know that a lot of people upgrade their phones in 2021, that would mean that a lot of people are going to be looking to upgrade in 2025. Another thing that stands out to me about Apple in 2024 not necessarily being a great year for iPhone sales is Taiwan Semiconductor's earnings over the course of the last year. And over the course of the last week, Taiwan Semiconductor stock price has ran up on solid earnings. However, these earnings are only solid compared to analyst expectations. If we look year over year, their revenue and net income have actually declined. And this is important for companies like Apple and Nvidia, as they are the two largest clients for Taiwan Semiconductor, as they currently produce the most advanced chips found in Apple's iPhones. And if you think about the iPhone business, they are not buying those chips the same year that they are selling them to consumers. They they are going to be buying those 1 to 2 years ahead of time in anticipation of the number of iPhones that they are going to sell the following year. So what that likely means is if we saw lower revenue and lower net income in 2023, Apple is likely anticipating that 2024 will not have very high iPhone sales. And Taiwan Semiconductor's CEO released the following statement during the earnings report. We expect 2024 to be a healthy growth year for Taiwan Semiconductor, supported by continuous strong ramp up of our industry-leading 3nm technologies, strong demand for our 5nm technologies, and robust AI-related demand. And the important part of this statement is the growth statement. So they are expecting to get back to growth in 2024. And likely what that means is their two largest clients, Nvidia and Apple, are placing an increased number of orders in 2024 that will likely hit the shelves in 2025 in terms of iPhone sales or Nvidia processors. And here we can see what I'm talking about graphically. This is Taiwan Semiconductor's revenue over the last 5 years. And at the end of 2022, they peaked out at a trailing 12-month revenue of $73.6 billion. Since then, the revenue has declined down to around $67.5 billion. And here we have net income for Taiwan Semiconductor, again peaking out at the end of 2022 at around $32.3 billion, and since declining down to around $27.2 billion. And here we have Apple's revenue, and you can kind of get a sense of the cyclical nature that you can see with iPhone sales. There's a few different time periods where we've seen their revenue kind of flatline or have a slight dip, and what we are seeing now seems to be very similar. And I'm thinking, in my opinion, that we could see this continue for the next year, and then again in 2025 see a large ramp up of iPhone sales. And analysts are almost expecting the same thing, because what we can see from their EPS numbers is that for 2024 they have an average EPS estimate of $6.59. If we compare that to 2023, they're expecting around $6.13. That's only around a 40 to 45 cent increase in EPS. However, in 2025, they're expecting their average EPS estimate to hit $7.17, which is closer to like a 60-cent increase year over year. So they're expecting 2024 to be a good year for Apple, but not a great year, and then 2025 to be a stronger year for Apple. And Apple is a company that tends to trade at a premium. They're currently trading at a forward P ratio of a 29.24, and we've seen them trade anywhere really in that range from around 20 to even up to 35 at times. Based off the 2025 EPS estimate of $7.17, Apple is currently trading at a 26.72. So keep in mind that's about 2 years out. And what we are predicting is that Apple could trade at a potential forward P ratio anywhere from 20 to 35. That means the stock would be in a range of anywhere from $143 all the way up to $250. So for me personally, I want to build in a margin of safety just in case anything goes wrong with their EPS numbers, their revenue, whatever it may be. So I have built in a margin of safety of around 10%, which means the stock price that I would be looking to buy or add Apple at would be anywhere really below that $130 mark. And in my opinion, for Apple to fall that much, I think we need to see a combination of a few different things, mainly coming around weakness with their numbers. And the reason I have Meta stock pulled up here is because they have gone through something similar in the last 5 years. They started investing heavily into the metaverse and the stock fell 76%. I think if we see something similar from Apple where they start investing heavily into their headsets and that technology, that could lead to the stock falling on weaker numbers. However, long term, I still think that that's the right path, just like what we've seen with Meta, as the stock has rebounded very nicely over the course of the last year. And maybe we will start seeing some of that weakness in their numbers in their next earnings report, which is expected to release on February 1st, and analysts have an EPS estimate of $2.10 and a revenue estimate of $118 billion. However, I'm not going to get my hopes up because Apple seems to be a stock that just continues to go up year over year. I would love to see it dip very nicely because I want to build out my position more. Luckily, I bought back in 2018 before a lot of this hype that came around Apple, and that proved to be a very good decision over the long term. However, never buy a company just because some random guy on YouTube talked about it. Make sure you are making your own decisions based off your risk tolerances as well as your time horizon. With that in mind, I hope you enjoyed the video. If you did, drop a like down below. And if you want to see more videos like this one, make sure to subscribe. And as always, guys, have a wonderful rest of your day.